Are we looking at the second leg to the bull market, right? Are we looking at that? That's what we're going to dive in today, looking at the macro data, the technicals. But first, let's start with the technicals, right? So S&P 500, right? We're at 448. Everyone believed, right, in this, actually, let me move myself a little lower. Everybody thought, right? Well, the bears anyway, that we'd be hitting this, or that we'd actually break down technically from this head and shoulders. Okay, you got the head, you got the shoulder, you got the head, got the shoulder, right? This was the break lower, and we didn't get that. We got two candles, right? Hammer candles. We identified this hammer candle. Not that technicals are everything, but if you get the macro along with it, you're in good shape. So you get that hammer candle. This is the third day in a row the S&P is up. We haven't seen this. We haven't seen this for a while, right? So a lot of very bullish price action here, and we're gonna go over why that is. Why did we break above the 444 level that we've been calling out as the resistance level? We still need to show support, but why are we breaking above that? We're gonna dive into that right now, right? So first things first, let's dive over to the macro data. The Fed has been talking about, especially at Jackson Hole, that they need to see the labor force come back into balance, right? And this morning was job openings. That's part of the data. We said yesterday, hey, we need job openings to go lower, right? And that's exactly what we got. This is what the Fed wants to see, the labor market come into balance, right? Come into balance. And this is a win for the people in the pause camp, in the hold camp, right? Holding rates September 20th. This is a win for them. Now, the data is not over yet. It's like a seesaw, right? You get some good news, you get some bad news, and you weigh it out. The market tries to weigh it out, filter it out. But for the most part, today, you got a very good job openings report. Even though growth is moving higher, those jobs are getting filled. So you're not getting a wage price spiral. You're not getting any data or anything that's saying that we get a wage price spiral. So that's why the market, that's part of the reason. This is one tidbit why the market is moving higher, because jolts coming down, right? Job openings coming down. Now, the second part, we did have some negative news, and we will go over that later. Basically, home prices still, maybe rebounding here, and we will touch on that a little later. But the big news here also, it's not really news, but it is market internals. It is the liquidity outlook. We talked about China yesterday, right? China was weak yesterday, and actually, let me just show. Let's just click on it, right? So this is basically the 28-day rolling liquidity injections from China. And what happened on Sunday? We had the Chinese real estate at risk on Sunday. And how did they respond? They cut the stamp tax, which is a trading tax, to boost capital markets. They also eased their housing mortgage applications, right? So they made it easier to buy a house. They're trying to get the housing market right. The real estate is a third of the economy. And now we're seeing capital injections, which we've been saying, hey, global liquidity might pick up coming from China as economies weaken. You get global liquidity start to pick up in certain areas. And now we're seeing that, right? This is from cross-border capitals. And basically, China liquidity is starting to pick up. And that's gonna leak, that's gonna fall into the global liquidity picture. Right now, second part of that, right? Job openings coming down. That's good for the Fed. That's good for the pause, right? Markets want to see that. Now we're seeing bond yields, which have been the story here to the weakness in the equity market, is bond yields are still climbing. Now bond yields are coming off the highs, right? They're starting to slump finally. We're starting to get that retracement back in bond yields easing. This also increases liquidity because your collateral is coming back, right? You got to bid on collateral. So the 10-year yields or 10-year rates are coming down. Yields eased from the highs following the Dove leaning jobs report. So this is, keep this in mind, this is following lower jobs report, meaning the Fed will pause, not will pause, but it puts one variable on the table toward a pause, towards no more hikes, right? So the bond market reacted to ease conditions, easing financial conditions, lower yields, lower rates, more liquidity, okay? Now that's what I'm looking at here. The dollar, right? The dollar these are financial conditions. Now the dollar was responding against that. The dollar starting to respond against that those bearish technical patterns, right? We've been saying that there's probably a bear signal here for the dollar. The dollar should be rolling over going into the second half of the year. and it's been moving higher. It actually broke above 103, which I thought was a big level. And I was like, this could push markets lower, and it did. But now the dollar's starting to reverse because yields are starting to reverse because the data is starting to show that the Fed is nearing the end of the hiking cycle, right? So the dollar's coming back. Dollars come back down, and this really does set up the S&P to move higher. If you get yields lower, you get the dollar lower, S&P goes higher, risk assets go higher, and all the catalysts start to play themselves out, and we're seeing it happen actually in the technicals, right? In the price action. Before we move, actually, no, let's talk about this. So next, liquidity, right? And I'm keeping track of this global liquidity picture, what it looks like. If we look at the money supply, right? The year-on-year money growth from the big four, the US Fed, China, Bank of Japan, and the ECB, the European Central Bank, I'm watching them pump liquidity. Now, this is a lagging indicator of liquidity, but it's moving higher, right? It moves up, it comes back, it moves up, it comes back, and now it's starting to move up again. Okay, this is lagging, but my expectation is as we're seeing China in real time pump more liquidity, they have zero inflation, they're in deflation, they can keep increasing liquidity to their economy, to their markets. I expect liquidity to go higher. Now that treasury yields are starting to ease, if this keeps up, and bond yields pick up, well, you get more liquidity in the U.S. markets, and we're going to get to that because basically, if your collateral is strong, bond volatility comes out, and your lending power, your reserves at the Fed can go higher, and we're actually seeing that. So central bank M2 for the four major central banks going higher, right? Check out my Twitter. I have all this posted on the Twitter. Now, when I said loan growth, this is another liquidity indicator here. This is complicated, but the reserves held at the Fed, I just call it loan liquidity. The reserves that banks hold at the Fed, that liquidity is starting to pick up again. Those reserves are starting to pick up. They bottomed at the bottom of the market here in January, right near January, they bottomed, and they've been coming down. They look like they're wedging. Either way, we'll keep our eye on it. Yeah, it's not making new highs, but if this liquidity keeps going higher too, this is just another variable on the seesaw, right? Which way are we leaning, bearish or bullish? And today, the bulls won. The bulls are winning because the liquidity picture is picking up and job openings are coming down. The chances of a rate hike are coming back down. And we also see that, right? I'm not just saying that. The market is actually pricing this in. Yesterday, right, the market was pricing in what? A 70% or no, was it 70? I think, well, versus yesterday, there we go, 78% chance of a pause. Or in reverse, it was pricing in a 22% chance of a hike yesterday. 22% chance. Now we're down to 13.5. So that just tells you the market is reacting, right? This is what we're tracking here, the macro, the technicals. The market is reacting in a positive way because it's expecting that data to lean the Fed towards pausing hikes, okay? Next. Okay, now this is the big one that I'm keeping track of because this has to do with the treasury supply. This has to do with liquidity also. Another liquidity measurement, cash leaving the reverse repo. We had a lot of cash. With this chart going higher, right, is an example as it goes up, that example of or a reflection of cash leaving the Fed. This is cash that is parked at the Federal Reserve. When it's at the Fed, it's not in capital markets, right? It's going into the Fed because wherever the rate hikes are, that's the interest that these people or these investors are going to get from parking their money at the Fed. But that money has been leaving lately. Then it stalled, and then we have the stall in the S&P, right? They're almost one for one, and I'm going to show you that also. They stalled, but now we got a big jump. Treasury rates started to ease, right? Bonds are picking up today, and now that reverse repo cash is kind of leaving the Fed. Maybe it's looking at equities, right? And I kind of wrote up here what's going on here. Maybe liquidity, their cash parked at the Fed, is looking at the Qs, looking at NASDAQ, technology, right? Bonds or Bitcoin, right? If we get that ETF, there's going to be a big move into Bitcoin, and we're going to go over that too next. Oh, that brings us to Bitcoin, right? So today, some of that actual news was there, and this isn't a for sure thing, but keep in mind this when it comes to Bitcoin, right? This is the longest bear market that Bitcoin's ever seen. Number one, we're at extremely low volatility at the bottom. So and now that the price is in a bear, now that we're coming out of the bear market, the path of pain is higher, meaning any type of volatility, any type of good news is going to be hypersensitive to the upside, not to the downside, right? A lot of the downsides are already priced in. Shorts are probably going to get squeezed at this point. If there's more good news, you got Grayscale pushing their ETF, ARK, BlackRock, Fidelity. And today, Grayscale, basically the judge is in their favor, right? You're getting some bias. You're getting sentiment positive for Bitcoin. It doesn't mean that they're going to pass it. They could drag this along for another year, but the sentiment is climbing. And what have we been saying? If the sentiment increases, you're going to see the Bitcoin price go higher, because this is the biggest driver going forward, right? And then you also add that in global liquidity plus the Fed pausing. Wow, that's a big move for Bitcoin. 25K, huge support level. We're not dropping that support yet, right? And Tesla, bringing us to Tesla, right? What is the big news on Tesla? Well, they are licensing their supercharger network, and we expect other OEMs, other companies to have to use that, right? That's kind of the narrative. Price got a little elevated, but we're in trend, right? We're holding anchored VWAP. The RSI was oversold. It is now bouncing. We're in the uptrend. We're out of that descending long macro channel that started October, or that started in 2021, right? The end of 2021. So Tesla is also going up. You have the full FSD. These are all rumors, by the way, that you could say they're rumors, they're expectations. Who's going to license FSD, right? Elon said that. Is it true? We don't know. Is it going to happen? We don't know. But price is looking forward. The price action is looking into the future to say, okay, is it possible? If so, we got to price that in, and technically is moving higher. Plus you got Cybertruck coming out second half of the year. And if China keeps stimulating, well, if China keeps boosting their markets, that is more liquidity going towards Tesla. Those margins go higher. You have a big growth story, okay? Now, looking into what we're going to get tomorrow. I don't know. Do we want to look into tomorrow yet, or I'll keep this up here and let's go look at before we get into tomorrow. Let's talk about this. So before we get into today and we finish off, okay, what does the technicals look like? Tomorrow we have more macro data. These are the most important data points, and this is my time, so this is not Eastern. Look 3 hours ahead here. Is this actually, I can actually change that? Cool. So we have ADP private employment, right? The market is expecting 195K. Now this is going to be sensitive. I'm not actually that confident that jobs are going to be low. I think they're going to be high. Now, is this a big deal to the Fed? Maybe, if they're too high, right? If they're too above consensus, maybe, possibly. But we also know that the BLS has been revising these jobs numbers lower. So the market might say, I don't know if we really believe you. We're going to wait for the revision. Number two, as long as job openings are coming down, the labor force is coming into balance. So that's okay if you have people adding more jobs to the economy. The negative side is there a supply side issue, right? Is there a supply side issue? So do people have to raise wages? That's not the case. Growth, GDP growth rate is expected to come in at 2.4%. I expect that to be there or hotter, right? Because the data has been pretty strong. The data has been pretty strong. We're getting that consumer spending or interest income from cash or treasuries is coming into the market. And that GDP growth rate might be pretty high there, right? Core PCE prices, that's another one. This might not be great going into, it's expected to come in at 3.8%, and I'll report on this tomorrow. But I just want you to look at, these are the early numbers coming out for tomorrow's market. And what you want to see on ADP private employment is, at consensus. You want it to meet expectations. I don't know exactly what the number would be to be bearish, but you don't want it to be too high, right? Which I don't know what that is. I'm not going to say I do, but if it does come in below expectations, bond yields should respond. We're all watching bond yields at this point. And what do I mean by bond yields? Just take a look at the 10-year yield, right? The 10-year yield got up to 4.35%, which was above the cycle high earlier in October of 2022, where the market bottomed. Okay, we got above that level. Now it's coming off, right? If we look at the RSI, we saw a bearish divergence there, and that bearish divergence is playing itself out. Okay, it is playing itself out. Bond yields are coming down. In the reverse, you're getting bonds bid higher, right? There is a bid for bonds. The economy is slowing down. That's the positive part. If job openings are coming down, if ADP or payrolls, non-farm payrolls are coming down, then and consumers are starting to weaken, signaled by the retailers, right? Signaled by some of these earnings reports, then there's going to be a bid in U.S. Treasury bonds, and that pulls down the rates, and the dollar can also ease at the same time, right? So that's sort of the backdrop we're looking at here. And also looking at the GDP growth rate, I think this continues, right? I think GDP continues to go higher. And right now, so looking back at the market, we'll go back to the market. We know bond yields are the issue right now. Can bond yields come down? We do have a big negative. We'll get to that also, which is inflation. And, that's going to cause bond yields to go back up. But for the short term, right, on the positive side, right, we didn't get that head and shoulders pattern. We actually broke out of 444. I expect us to come back down and check or hold 444. We still need to hold 444, right? It's not, just because we broke out of it today, that could just be a disallocation for traders, and we need to come back and actually support that level. Now, really quick, how do we go higher? Right now, what we're seeing is the indicators for growth or for earnings right now are being revised up. GDP is stronger than expected, right? GDP is not only stronger than expected, but you're going to see earnings start to be revised up, and I'll get that data when I do have it coming in. There's a lot of data coming in, but growth expectations are definitely higher on the second half, right? Looking even further. This makes the pain lower. Everybody was expecting the rollover. It didn't happen, right? So now you remove the technicals. This turns into support now, right? We got to find out if it does turn into support. We're going to change this color to yellow because that might be our support line, right? We'll see if it actually holds going forward. But two, the Inflation Reduction Act, right? The Inflation Reduction Act, the CHIPS Act, those fiscal liquidity policies don't come online till Q4. So the market is actually front running to say, okay, there's more growth coming in Q4. So even though consumers are, weakening to some degree, we're not going to see a collapse in growth. So yeah, we'll buy bonds up. We'll protect ourselves. Yields will come down. Maybe they don't, but there is more growth to come, meaning earnings, the two things that run the stock market: policy, right? Fiscal, monetary policy, and earnings, or, how much profit a company can retain and pay to shareholders. So the earnings expectation goes up. Policy expectations to pause are also going up. So that's why the market's moving higher. The macro and the fundamentals there. On a technical basis, we just need to hold 444. If we do break out above 460, well, this is the second leg to the bull market. We can do technicals all day, but I told you we're holding the trend. The market is holding the trend. If we look at the VIX, the VIX is collapsing, right? Volatility is coming down. This is a reflection that the path of pain is higher, not lower. People are scared to miss out on this rally, right? They already missed out on the last big upside rally. Now they're fearful, or I would say, in other words, how do I want to phrase this? I would just say that big fund managers are fearful, right? They have to perform to some degree. So we see the VIX coming down. Nobody's buying insurance against the S&P 500. And we are moving back up. Bond volatility also down. So there's not really a big risk to the bond market, which is a very, very positive news also there. And going into Q4, you have the CHIPS Act, you have the Inflation Reduction Act. This could also mean higher rates. This could mean, and I'm starting to kind of maybe change my outlook. I think if inflation collapses, maybe the Fed will cut rates by 25 basis points because there is a natural rate of interest. I'm sorry, there is a neutral rate of interest, which means if you take the Fed funds rate, you minus it from inflation, you get a measurement of tightness, right? How tight is our rates? How restrictive are they? Right now we're at 2%. If inflation falls further, that increases, right? So is the Fed going to allow that to happen? Can they cut rates? I think that's a possibility. But with growth coming this strong, revised higher, maybe not. Maybe rates do stay higher, but that's okay, because with higher rates, you get banks, you get anybody that's holding cash, yielding off that cash, stabilizing the market, and risk can be taken, right? You get more risk being taken in the capital markets. The economy might slow down, but not too much, because you get the Inflation Reduction Act, you got the infrastructure bill, you get the CHIPS Act, still keeping those jobs from going negative, right? So if jobs go negative, which is payrolls, which we're going to get, I believe, on Thursday or Friday, then we might have an issue here. But for the most part, heading into an election year, right? What do you expect? How do people get elected? More stimulus. We've been saying this all year. I expect more fiscal stimulus to come into the economy because we're heading into election year. And that's what usually, that's usually what you do. So regardless of who you're voting for, I'm expecting more fiscal liquidity, which could lead to the Fed actually holding rates higher than expected, right? So that's sort of the backdrop there. Looking at the technicals, the Qs, we jump over the Qs. The Qs also breaking out above their level. That level was 372.50. We're also above that level too, right? Now I want to flip over to to Tesla. We've been talking about Tesla for a while, right? For the last week and a half. I signaled this literally on Twitter about a week ago. It came down into the trend. It was it really the signal for Tesla was this RSI, this oversold RSI. There is still a lot of good news in the backdrop, and before it comes out, you watch the price action. When people get very bearish, when they are they're overly short, right? And they get bearish, and it's not people selling the Tesla stock. What it is people are short selling Tesla. They're borrowing the shares, they're shorting the shares. They have to cover, right? Once you get a big move like this, 29%, they're going to cover their positions. You get artificial buying taking place. You get trend support buyers coming in, and that's why I got long Tesla. I've been long Tesla for a while, and I can show those numbers. Actually, I'm thinking about taking some off today, but I might before this stream ends. I might take some off. I'm trying to decide. We might get some actual volatility from not volatility. We might get some downward pressure looking at this economic data going forward, right? And the reason I say that is these payrolls might come out stronger than expected. The market could just eat through it, could look through it, maybe not. Also, the downside here today, home price index, this is what the Fed's looking at, right? That actually went higher. So the home price index, which is basically average home prices, let me make sure I get that correct. This is from the FHFA, so the Federal Housing Finance Agency, measures month over month. So this is month over month price changes in the average single family house, right? And that went higher. That actually did go higher. And I talked about that yesterday, but the market didn't care too much. And I think all that means is you're not going to get any cuts anytime soon. The Fed's going to have to hold. But if we look at the inflation part of that, so the rate of change, that also bounced in April, May, June. It bounced in June. Maybe it goes lower, maybe not. So this is the downside, is that we're going to get some Fed speak coming up here, and they might actually signal, hey, well, your housing inflation, S&P Case-Shiller Home Price Index, it went negative, but now it's starting to bounce. Okay, is that negative? Is that positive? I don't know. So the market might react negative to that going forward, which is why I might take some off of Tesla. But for the long trend, for the long term, maybe not. Maybe we just hold here, right? It looks like we're definitely going higher. As long as interest rate risk stays where it is. And I think there's still a lot of FOMO to come in. But 10-year yields, falling, that's the big story here, because the macro data is coming in line with a pause. It is coming in line with a pause. And that's what we're seeing here, right? And then looking at that Bitcoin ETF, what were the highlights there? If you guys do have comments, just leave them in. I'll go ahead and hit those comments afterwards. So the Bitcoin ETF, U.S. Court of Appeal, because this is going to be the fastest horse. Crypto, I still believe, is the fastest horse when we go risk on, when the dollar completely rolls over, gets over 101. Appreciate the love. Big man's coming. All the rest of you on there, throw your questions in. If you want them to stick, throw them in on YouTube. If you don't mind, go subscribe on my YouTube. I'd appreciate it. It helped me out. If you think I bring you value, that would help me out, and I'd appreciate you guys if you did. And leave a comment, right? So the U.S. Court of Appeals for the D.C. Circuit has paved the way for Bitcoin exchange traded funds. And this is going to be very complicated going forward, but for the most part, the path to making progress on regulation is increasing, okay? And I think the closer we get to the election, the more positive this is going to be, because you get pressure from political, whoever it is, you're getting political pressure to give the people what they want. And people want a Bitcoin ETF, right? This opens up retirement funds. This opens up hedge funds. This opens up everyone who doesn't want to get private keys and doesn't want to, it's complicated, right? It's more of a tech thing. Most people are not technology based, so they don't want to see that. But, or they don't want to do it. They want to just have exposure to the ETF. And I think that's going to come closer in our purview as we get closer to the end of the year and into 2024. That's just the ETF. You have liquidity coming in. Global liquidity will set off Bitcoin's price, and so will a pause, in my view, a definitive pause, right? So now you're getting a lot of analysts actually go pretty bullish going forward, and everybody's getting long. We do have some data coming into play that we need to look at, but that's kind of the outlook right now. Liquidity is going up, bond yields are coming down. That increases liquidity. And if we look, so the negative, right? Other than housing price inflation, here's the negative for oil prices. I always say oil is the most important chart over the long haul. When oil spiked, that was where inflation started to ramp back up, and maybe oil goes back up, but right now it's at the same level it was at the beginning of the month, which means that energy inflation from oil, crude oil, the biggest input to inflation, will be zero. Okay, now let's say it breaks out. Well, it won't be zero anymore if it breaks out and goes higher. So that is the downside backdrop. It is housing prices still climbing slowly and oil prices still rising up, which is also a reflection of a stronger global economy. And if you did join us yesterday, you saw that one of the charts that's on my Twitter is that global economies, now that China leads the credit impulse, meaning the global liquidity injections to the global economy, China and Asia in general leads that cycle, leads the global economic cycle. In China, they first started stimulating, and then the economy didn't recover enough, which is why we're going to keep track of their ISM or their PMIs, their manufacturing numbers that come out tomorrow, I believe. And the whole point to saying this is that most of central banks in the world are starting to revert. Not most of them, I'm sorry. A quarter of them are starting to reverse. They're 20, I think it was like 23% of central banks, right? Their last hike, their last rate decision was a rate cut. And I think now that inflation's coming down, right? Disinflation, right? In a lot of areas, then, that can continue. And so you get the change in cycle, and you get a lot of bullish narratives coming into play. Now, if oil starts to ramp back above 83.50, then everybody's going to be in trouble. They're going to have to hold rates, maybe even increase again. But shelter is coming down. Shelter is the most lagging indicator for CPI, for inflation in general. And that should be coming down, especially for rents. Rent inflation definitely should be coming down in the backdrop. So keeping your eye on oil, 83.50, big level, right? I was hoping we'd continue to decelerate because you have a lot of countries who are increasing their supply of oil. Is demand going up? I don't think so. But U.S. is also increasing their, and I know the U.S. must at some point refill the SPR, meaning they have to buy oil, but they're also, if we're the biggest producer of energy, we can keep increasing the supply of oil and not really fill the SPR until those macro backdrops or the macro headwinds are, turning the other way. If we go to nat gas, that's still low, so there's no commodity inflation here. Copper's trying to make a run. It's in a big giant wedge pattern, but not going anywhere. If we look at wheat futures, making new lows. Wheat futures making demand for wheat, which is going to be a component to a lot of bread, to a lot of carbohydrates in general, those are going lower. So I don't see food inflation continuing any higher. We're going to have disinflation. It might not go to zero or reverse, but we should get that disinflation based on these numbers. Okay, so again, jumping over to the technicals, right? Jumping over the technicals now, or market, looking at the market dynamics. Let me see, make sure we didn't miss anything here. No, I don't think so. I think we got everything there. Looking at the market dynamics for, where's the breath coming in today? So XL, financial sector going higher, right? Powell just say inflation is still high. Yeah, he'll just say inflation is still too high. He's going to say that. The real question is there enough evidence for the Fed to stop hiking rates? That's the real question. Is there enough evidence for the Fed to stop hiking rates and to hold, right? I think there is so far. I think there is. There's no real big spikes happening. You're getting a deceleration, but we're going to keep up to date with this. Right now, the market is pricing in as an 85% chance of a pause in September 20th. So we still have some more inflation data. As a matter of fact, this Friday is going to be a big indicator for this Friday, which is the PCE, the Fed's preferred inflation gauge. I don't actually expect that to look really great because it kind of reflects the past, and we do know the past, which was CPI that came out earlier in the month, was up from 3% to 3.2%. So PCE might not look that great, but I think core will look good. I think the market will do good based off core starting to ease a little bit. Core inflation is coming down while headline is a little hot. right? So banks can now recover that those yields or the treasury debt risks are coming down. So we're getting banking starting to yield. We're getting banks starting to ease a little bit. Okay, KRE, XLF, energy might still be very bullish because again, if we are reaccelerating, right, and some of these companies they also hold solar. If we are reaccelerating globally, then energy producers should be actually really good versus the oil price. And that's kind of it's, ooh, who is this? Solar caught a big bid today. Big bid today in solar. Hey, we just talked about this yesterday. We said, hey, solar looks really bad, but very bearish divergence. You see the RSI was negative. I'm sorry, very bullish divergence because RSI was so negative and price was holding. So big move on solar just today. It doesn't tell us too much. Also, clean energy, big move. And look at clean energy and solar. Here's the bull. Here's the bull argument for clean energy and solar, right? Here's the bull argument. I will get to your comments, Prakash. The bull argument is the Inflation Reduction Act, which is basically government stimulus or spending into the renewable energy solar sector of the economy, right? Whoever's gonna, these are the ETFs that represent that. Well, that's coming in the fourth quarter, right? So earnings for these companies, or and this isn't just one company, this is the basket of companies, earnings for these solar names, for these companies who are going to benefit, or the sector that's going to benefit from the Inflation Reduction Act and the CHIPS Act, they're gonna have better revenues, period, right? That's a bid for these ETFs. And now it's about time that, if rates come down, you're going to be doing good there. You need rates coming down though, for sure. So you said the U.S. has to pay $31 trillion in debt. If they don't hike rates, U.S. will collapse. Okay, I mean, let's think this through. The U.S. has to pay $31 trillion in debt. The U.S. does not have to pay $31 trillion in debt. What people don't get is that the system is based off debt. We are told that, I know that we are told in general, right? We are told in general, so I'm going to talk about this a little bit. We're told in general that, oh my God, more debt is bad. Debt is, every millionaire every billionaire has borrowed money. They create debt, right? They create debt. Every time you swipe a credit card or whatever, you create debt. That's how the system runs. So more debt is a sign of a growing economy, not a weak economy. The question is that debt going to be productive for your economy, or is that debt going to be dead, right? Is it going to go into things like spending on something that doesn't, non-investment spending? So really, it's how we handle the capital. So not only that, the interest rates, right? It comes down to, are your interest rates too high? So you could have a lot of debt as long as your interest rate payments are low. Is that the case today? No, it is not the case today. Interest payments are very high. But at the same time, that's also helping the economy, because those who have cash and not a whole lot of debt are yielding from those interest rates. So it kind of cancels itself out there, right? The U.S. is going nowhere. The U.S. is still the most powerful economy on earth, still the biggest economy, regardless of which best military, right? We have the most liquid equity market. Treasuries are still the pristine collateral for the world. There's still, people still buy treasuries. And despite what you hear about BRICS, BRICS can't decide what currency they're going to use. They're going to have to use a blockchain at some point, but the dollar is still the most dominant currency in the world, right? Of all the fiat currencies, it's still the most dominant currency, because 80%, somewhere around 80% of debt is denominated in dollars. So it's not going anywhere anytime soon. So you said if they don't hike rates, the US will collapse. Well, actually, if they hike rates, that's actually making you closer to a collapse, because if you hike rates higher, Prakash, then your interest payments are much bigger. Therefore, if you can't meet those interest payments, that's where you actually get a collapse. That's where you get a big debt spiral, right? If rates go lower, well, if they hold here, it's really tricky. If rates go lower, actually, then what they do is they monetize the debt. They use old debt and they pay the new debt. So you kick the can down the road, right? That's sort of how the financial economy works. You kick the can down the road, and you hope that the debt that you're pulling from the system is productive, right? And the only way to get productive debt is to invest it in technologies that actually work, right? So Tesla, for example, is one company who's actually, working on energy storage, which that segment is bigger than the EV segment. And what that does is, if you can store solar energy, if you can store energy, the cost of energy goes down. Therefore, you can now eat up the debt, right, from your country, you can ease interest rates, you can ease the debt burden on the economy because now it's way cheaper to drive energy. It's way cheaper to drive energy. So that's why technology at the end of the day is always the best investment over the long haul if you pick the right companies, right? If you pick the monopolistic companies, which is tough. It could be tough, right? So if you got questions on that, I can answer your questions, but we're just tracking the economy here. Debt is not a bad thing. It is how you use the debt, right? That's what makes it bad or good. There is bearish indicators as a whole. Okay, no comments there. Bro, there are too much bearish indicators as a whole than just this simple pump. There are so many. Okay, you're saying there's so many bearish indicators. Here's one that people like to actually like to signal here. I'm going to throw it up on YouTube so you guys can see it. I think we did speak about this yesterday. The bear signals. There's so many bear signals. Well, you know, there's bull signals, there's bear signals. It depends on how you navigate it, right? There's bear signals from October all the way till now, and the market's still much higher. So bear signals are signals, right? The market is like a seesaw. You have good news and you have bad news, right? And you get a pile of good news, you have a pile of bad news, and the seesaw is trying to decide which one's heavier. Eventually you get that change. The biggest, heaviest news on the bear side was that inflation would be going higher and that growth would collapse. And that just wasn't the case. The case was inflation has actually been coming down, and growth has been stronger. Therefore, the seesaw, pulls down this way, and now you have the market going higher, right? It's pointing higher because the big bear cases just aren't there. Oh, the yield curve's inverted, blah, blah, blah. Well, people don't even know how the yield curve works. So they just say, well, the yield curve's inverted. They think, okay, the market should go lower. When you need more variables, you need to understand the dynamics. The market changes. The yield curve isn't a bad thing that it's inverted. It is a signal, but guess what? Information, and this is real complicated, but information comes so quick now, you don't really need a yield curve. Everybody knew when the Fed announced in 2021, in November, I remember the day because crypto sold off and NASDAQ started selling off, we're going to increase rates in March of 2022. The market priced that in as quick as possible, and we got a huge sell-off. Earnings got revised down, growth got revised down because they would hike rates. They hiked faster, right? So the yield curve's a little behind. The guy who actually does the yield curve also said, hey, this is actually not giving us the best signal, right? So what is the yield curve? It is the 10-year and 2-year yields, which we talk about every day. We're like, hey, it's all about the yields, right? If yields go higher, that's bad. If they go lower, that'll be good, right? So what we want when it comes to the yield curve is you want long-term rates to actually stay where they're at, or they could stay there, but you want short-term rates to come down. You want the buyers to come in and buy short-term bonds to get the yield curve back into balance. So before people signal the yield curve, they really don't know what they're talking about here. Number two, when the Fed cuts rates, the market collapses, and they go back and they try to show all the instances that happened. But if you really look into the details, that's just not the case. In 2019, I remember I was investing in Facebook. It was December of 2018. And I was getting crushed. I was like, what's going on here? I didn't know much about the market. I just thought, hey, you just buy something when it goes down and it goes higher, right? And we're getting crushed here. And the Fed came out on Christmas or the day before Christmas, and he said, we're going to stop hiking rates. And so you can see in blue, those are the rates, right? Those are the rate hikes. And the market actually bottomed, right? It bottomed as soon as the Fed came out and said, we're going to pause, right? He hasn't said that yet. We haven't got the signal today that there's a pause. We have just not got that signal yet, but he paused, okay? They paused for a while. The market recovered to all-time highs, okay? It recovered to all-time highs. It wasn't straight up. There was some volatility. And then once we started cutting rates, the market made new highs. The market started chugging to all-time highs. Now, eventually, right, you had the pandemic, and that crushed all of growth. Before the pandemic, we had the best economy. You guys remember it. Let's not get political, but we had a very strong economy, a very strong stock market. So once the pandemic hit, that crushed growth to zero. Therefore, rates had to drop to protect a global economic collapse. So it wasn't the rate cuts that caused the collapse. It was the pandemic. It was a black swan event. It was not the rate cuts, right? That's 2019. You could probably find other instances of rate cuts coinciding with that, but that's my spiel on that. So what else is your bear argument? You need yields to go higher to really see, you need yields to go higher to really get a bear market, period. You need yields to go higher. You need the dollar to break out. Those are the easiest ways to look at it. And the dollar's cycling lower finally for the first time. If US doesn't hike, how are they going to get interests from other countries? If US doesn't hike rates, how are they going to get, let me try to rephrase this. How are they going to get interest from other countries? Well, I mean, the dollar is the most interesting, the dollar still yields you the most yield. Okay. So, I mean, I don't know. I don't really fully understand your question. And I'll get to you, Chavez. What up, Chavez? The dollar right now is yielding what the interest rate, like whatever the Fed funds rate is, right? The effective Fed, it's at 5.5%. You can call it. That's what you yield on your dollars. That's why the money market funds are at all-time highs. So nobody else is yielding more than the dollar. That's a stable currency. You might get some other rates at 9%, but you want to hold Russian rubles? I don't think so, right? You don't want to hold those currencies. Not only is the yield important, but is the stabilization of the asset that's important, not just the yield. You could have the asset go to zero and you have a high yield. It doesn't matter, right? So we don't need to hike rate. The only reason you're hiking rates really is to strengthen the dollar and to destroy inflation, which we're getting that. We are getting disinflation. It's not going to go, we're not trying to get to zero inflation. That's not how the system works. The system works with inflation. Equities in the economy actually does better with a little bit of inflation. It just can't be too high versus everything else. All right. So yeah, we don't collect interest from other countries. They buy our treasuries for the most part, and they actually collect yield off those treasuries. So that's how that works. I wonder if rate cuts were priced in 2019. Oh, okay. Based on that chart, were rate cuts priced in at 2019? Well, the market was selling off because of the pressure of the hikes. Also, there was other instances in 2019. I believe our ISM numbers growth was actually decelerating. So despite what you hear that, we had the strongest economy, we did have a strong economy, but there were some other fundamentals that were actually weak about the macro cycle. And those other fundamentals made the macro cycle weak. And so the interest rates were growth wasn't re-accelerating the way it is today, right? You're not getting fiscal policy the way it is today, Chavez. Today, we're getting Inflation Reduction Act, CHIPS Act, infrastructure, new technologies hitting the actual economy, AI. You're getting all these upside, futuristic, how would I say this? Not futuristic. I don't want to say futuristic, but forward-looking indications of better productivity. We were not getting that 2019. So the rate hikes were too heavy, right? The seesaw fell too heavy in one direction versus today, the seesaw has been very negative. And now the path of least resistance is higher, not lower, because a lot of people are in cash already. So what else do we have here? Again, if you guys don't mind, if you like the content, if you appreciate the content, link is in the description for YouTube. Go jump in, support me on YouTube. I'm trying to grow the channel. I'd appreciate you guys. You would really help me out if you guys could do that. I feel good when I see, even one subscriber, and trying to get that going, man. It's a little different than TikTok, but yeah, I appreciate you guys and your questions. Also, if you leave a question, I can actually see that question a little longer versus it gets lost in the TikTok algorithm or the TikTok the way it works. It just gets lost there. For how long? Bussy Bop. I probably talk too much. I don't know what you're talking about. For how long? Do you think Bitcoin will drop again? I mean, it's not really a question. It's really a risk reward at this point. The question isn't will Bitcoin drop again? Because Bitcoin could go up 20% and then drop, right? Drop again. So the question is it going to make new lows on the year? For one, no, it's not going to make new lows. It's not. There's nothing that indicates Bitcoin's going back to 15,000. Nothing that indicates that. When it comes, I'll let you know, right? But we've been saying for a while, 25K is the level. That is the buying area, 25K. If you get a black swan event, it's going to dip, but then buyers will come in, right? The supply. I think somebody else asked. Anyways, so yeah, I think 25K is the level, right? If it drops, it probably comes back into 25K and swipes up a lot of that demand. Plus, the supply of Bitcoin is really low, and the ETF is your strongest narrative. Improving regulation is your strongest narrative. So keep that in mind. You have a stream schedule. Right now, I'm streaming at 11:45 Arizona time, so I think that's 12:1, 2:45 is where I'm at right now. I'm going to be at 2:45, and the reason it's a little later, I've been trying things out, right? I'm experimenting. I've done early, extra early, midday. So right now, I'm going to stick to this. If it changes, I'll let you know. Um, why is and I'll answer you guys' questions wherever you guys are at. Why is your live sponsored? Okay. Well, I mean, this is for investing, understanding the business cycle. So this isn't for entertainment necessarily. It's you call it politics and news. We are looking at the trying to improve your finances. That's what we're doing here. How to read the market, understanding the technicals, the macroeconomics, and looking into the future. It's not for blatant. It's not for entertainment. It's to improve your life, right? Go check out the website, by the way. Oh, hey, if you guys are new, go check out. I have a macro newsletter. It's free. Link in the description. Comes out every week. If there's something that hits the market, I will send that information out. So you can go check that out. And it would support me, right? I'll see you guys subscribe on there. And it's a macro newsletter giving you the upside. Remember, at the beginning of the year, everybody was very bearish. And I've been on here the whole time, all-time highs. Markets are going all-time highs. And, so there's some bulls, there's some bears, but we're navigating the business cycle. We're navigating, what the Fed is saying. We release notes. Okay, I release notes on the Fed when they speak. What is the translation? What are they actually saying here? What's going on? What does the global liquidity picture look like? Where are expectations going forward for the market? What are the actual technicals looking like, right? How are interest rates looking? So we're going through all this stuff, trying to digest it and simplify it for you guys as much as I can. Ask your questions as much as you can. I put my chips in on some dip, baby. Let's go. Yeah, Tesla's up a lot. What do you think of algos, bro? If you're talking about algorithms in general, I mean, I don't really care. Algorithms are algorithms. I don't really, it's not really too deep of a question, but if you're talking about algo trading, no, you rely on somebody else. You have to rely on somebody else. Oh, Algorand. Okay, Algorand. What do I think about Algorand? I actually don't have I would ask my brother on that one. I don't have a response on Algorand. I don't have a thought on that. My biggest thoughts here in crypto, going into the sensitive cycle where interest rates, where the Fed is speaking, where global liquidity is picking up, I think altcoins will go higher. But sustainability wise, fundamentally wise, I only want to be with cryptos that have an actual use case in the world, like Ethereum, like Bitcoin as a store of value, like Ethereum as a Web3 global application layer, and then Chainlink on the riskier side. Chainlink as an infrastructure, right? Swift is using it. The Google CEO left, went to Chainlink. It is the most dominant Oracle network. CCIP is connecting all central banks. So it has an actual use case. I'm more interested in those. There's a lot of cryptos. The crypto space moves very fast. What about quant? Not interested. I'm actually not interested. I don't know about those. I really don't know too much. There's a lot of cryptos, right? Crypto moves quick. So I'm more so, technology in the stock market, and then crypto. So crypto and tech is where I'm more interested on when it comes to like, Tesla, Ethereum, Bitcoin, like I said, Chainlink, some other stuff. And then the overall market, right? The macro, what are the macro swings? And I would say to people, hey, the biggest macro factors here, they're all going higher. At the end of the day, you want your, BABA and AMD. I think BABA is actually making a move higher because of the Chinese stimulus, right? This is what's important here, is when you have China printing money, and we've been saying this for a while, that, hey, at some point when economies weaken and your inflation is pretty much gone, and I saw somebody say, there's no disinflation in China. Yes, there is. China has no inflation, meaning that their central banks can keep printing. Okay, and we do have a wedge here on BABA, right? Am I going to trade BABA? No, because I think the opportunity for Tesla is much better, which is why we bought calls at 213, 212 a couple weeks ago. And, maybe thinking about taking a couple off. But I think Tesla goes back to all-time highs. It's in an upside trend at this point. Now you want to look to the overall market, the S&P 500, and we broke above the 4,400 level. That was the current resistance. We're well above that. It doesn't mean we're going to keep going higher. We got to keep seeing, what is the market breadth? We got to keep seeing the macroeconomic data and to see if that actually aligns with what we're seeing here. But the VIX is down, right? So insurance against the S&P is down. The yields are backing off. That is the biggest story. Bond yields are backing off because you're not seeing wage inflation. You're not getting any of that inflation there. So what do you think about Coinbase and Riot? I'll tell you this. What do you have for crypto? Bitcoin, Ethereum, and Chainlink. What about Coinbase or Riot? I haven't looked at Coinbase. You know, Coinbase isn't a bad investment. I just, when it comes to crypto, I just would rather, me personally, and everybody's situation is different, whether you're trading or whatever. Coinbase is a good opportunity. As a matter of fact, if you are on the YouTube, I'm going to show the technicals on Coinbase because there is a gigantic head and shoulders pattern. This is very bullish. This is a very bullish pattern. So good question there. Look at this head and shoulder. This is huge. You got the shoulder, right? And this is coming off what, 105, the head, and now you have another shoulder. You almost have like two shoulders. So once Coinbase gets above, I would say, once it holds above 100 and then really starts to get above 115, Coinbase is going to launch off. And really what's going to align with that is the next crypto cycle, right? The next crypto cycle. And we saw this is the biggest bear market in Bitcoin's history, the longest bear market in Bitcoin's history. So I would say, hey, once the crypto cycle picks up, which is probably going to get triggered by, number one, either global liquidity, lower rates because it's a risk asset, or the ETF, which is pure demand. Well, Coinbase is going much higher than that. So it'll benefit from every altcoin. Coinbase is going to benefit from every single altcoin if that is the case, right? Again, if you want to know more about, what I talk about, go check out the newsletter. It's free, link in the description, or go support me on YouTube. I have a lot of videos. If you did miss the stream, any of it, it's going to be on YouTube. I'm also on YouTube, and link in the description, and you can catch the bottom of the news, what we talked about today. I'm going to update you guys on what is important to look forward to if you're a trader or an investor. What is the most important macro data to hit the news, right? Then on the next day, you're looking for those numbers, the estimates, the expectations. What are the macro forces that need to change? Right now, we're getting the dollar rollover. So look, Coinbase, as simple as this. Yes, Coinbase needs to get above 100. What's going to push it there? It's going to be rates coming down. So the cost of capital for these risk assets coming down. What also coincides with that? A weak dollar, a very weak dollar, right? The biggest cycles in NASDAQ, in crypto, and tech happen when the dollar cycles back down. So I'm looking for the dollar to break below 103. I don't want to say risk on, but for my sentiment to say, okay, the momentum is here, right? This might come despite an ETF, just because liquidity conditions are increasing, right? The markets are the risk markets are basically at an inflection point here. Either liquidity goes higher, much higher, it's at a very cycle low, interest rates stall, maybe come down a little bit, or they go high. We're at a big inflection point. This is where you have the most upside in any market when you're at the precipice of a big cycle in the macro, right? You're at a big macro cycle, which is why we're tracking this, and which is why too, if you go to my Twitter or you go back, 25% of global central banks are cutting rates. A quarter of them, right? It's like 23%. They're starting to cut rates. So the global economic cycle is starting to turn back up. And this is going to be very positive for risk assets as rates come down. Liquidity increases, right? Liquidity actually increases as rates come down. So keep your eye on that. Any other questions on the technicals? I'm going to go through actually some of these technicals when it comes to tracking the market. We are seeing, you can see here, and we're on YouTube if you want to see the charts, equal weight. Usually we do like 60, 70 minutes, 90 minutes. If I don't get no questions, I'm just going to move on. I'm going to get ready for the next day, and then just look out for another video or something in the newsletter. But right now, equal weight average for the S&P is catching a bid. We're right on trend. NASDAQ, right? Oh, NASDAQ equal weighted, right? Right on trend. So we've been tracking these technicals, and we did say, hey, there is a risk of a reverse of the head and shoulders pattern on the S&P, and that breakdown point was 434. It didn't happen, and 444 was our bull signal. Boom, we're back up, right? 444, S&P is back up. Now it looks like it's just trending higher. Now it looks like it's literally just trending higher. What is your YouTube? Just go to the link in my bio for TikTok. And there's a YouTube link on there. It should take you right to my YouTube. You can watch it on there where you actually see the charts, and you can ask questions on the comments, and I can address those technicals because I do a lot of technicals, also deliver the macro. The technicals you can see visually, right? The macro, it's, I have charts. You can go back and see, listen to the rest of this if you want to. But yeah, what is your that's where it is. It's over there. Appreciate you guys sharing the live too also. Um just hit me with your questions. We're in a bull market right now. We're still in a bull market. I expect the market to go to all-time highs. Core inflation is still the biggest narrative negative against the market is inflation concerns, right? Growth is no longer a concern. Yes, the low income consumer might be weak in the second half, but you do have the Inflation Reduction Act coming. You do have the CHIPS Act coming, right? We look at S&P earnings. I said, hey, earnings are bottoming. That's why the market will go higher. We broke out. The market went a lot higher than I thought it would based on that. And now it retraced, right? Which is exactly what you want. We're in seasonal weakness. September is the most weak month. And what have I been saying? I don't know if this will stick, right? Maybe 444 doesn't hold, but I said everybody is looking at seasonal weakness in September. So what they're going to do is try to front run that. And now we're seeing that the path for pain is actually lower. We're actually seeing that, investors are saying, well, we're not going to wait for the actual low in September because everybody's thinking that same thing. So markets are going higher. Thoughts on M? Let's see. Thoughts on M? Good question there. Macy's. I think Macy's goes lower because Macy's is a low consumer segment. Maybe it's oversold. Look, I'll say this. Macy's is probably going to rebound here on a technical basis. They're extremely sold off. They're probably going to rebound. If you want to see the chart, go to YouTube or go to my YouTube link in the bio, link in the description. Or you could just fast forward on the YouTube and go towards this area where I show the charts. You could look at it later. And so Macy's is pulling back, right? They just had earnings. They're probably going to rebound to some degree and fill the gap at 14, 14, 15. But I don't see a path higher for Macy's because most of the stimulus is going into technology and the low end consumer is weakening. The Fed talked about this. And so I think Macy's will maybe be higher in the short term, maybe the next month, but the downtrend, it looks like it'll continue unless you get the Fed actually flip and start cutting rates, which may not happen till 2024, maybe even 2025. They could be holding rates higher for longer because growth is so strong because of that fiscal policy, right? That's what's important. Fiscal liquidity coming into the markets, going into an election year where the governments typically try to send out more stimulus, try to win the voters over with more money, right? That's typically the case. And when people make money, they're, in general, the people who have a lot of money already, they're not going to Macy's. They're going to spend on services, which is why the service economy is a lot hotter and a lot stronger than the goods economy. Can't believe BitBoy lost everything. Stay away from scams. Oh, BitBoy lost everything. Did he really? He lost absolutely everything. And I'm also going to switch over to the trading chart so we could do some TA on Tesla. Where's the next support? Where's the next resistance for Tesla? S&P. These are macro charts. So you're just seeing like the bigger picture, but I want to go into depth and see where the actual levels are. Right now, I would say the big negative again to the market is that oil is back above 80. I don't think it gets above 83.50, but that's going to put pressure on CPI for September 20th, seeing oil go up there, right? Market's not reacting yet. So BitBoy lost everything. I'm gonna have to look into that. I didn't see that. I did not see that. See if anything else hit the market also while we're here. Breaking news. Oh my goodness, man. SPY is just ripping 449. Those are shorts. And we're going to go to the technical. Those are intraday. We'll do some intraday. The SPY is at 449. It gapped up. Where did it come from yesterday? Gapped up a little bit. 441, 9 point. That's a big move. And that is because expectations for the rate hike are coming back down, right? Yields are easing off. Global liquidity picking back up. That is why the market is headed higher. If you're new, you probably go rewind on the YouTube video if you're new. And you'll see why. Chainlink is actually trending, well, on my feed for Twitter/X. And Chainlink is going to do very well. I think that'll be one of the best not side cryptos, but one of the best, like a side chick. That'll be one of the best altcoins. I don't even want to call it an altcoin, but it still is. All right, so let's see. What are we seeing here? Wednesday. on Twitter before I throw in the technicals. All right, I'm gonna throw the technicals on. What up, Ronnie? All right, here we go. So here's the internals for the market. Market internals. There we go. Okay. So let's take a look at this. And then at the same time, because we got about 30 minutes left, if there's still more questions, go ahead and pump your questions out if you still have them. Regional banks face hit from new debt level requirements. Okay. Well, that's not new. I mean, I think we covered pretty much all the catalysts, right? All the good news and the bad news. Bad news is shelter inflation, not shelter inflation, shelter prices in the US anyway are still slightly going up. They're not, they came down a couple 6 months ago. Now they're starting to go up a little bit. So we need more supply from the home builders for those, but right now they're building supply for multifamilies, which is why I think rents are going to collapse. Rent prices will collapse at some point. They're just a super lagging indicator. Okay, that was it. You see the blue line if you're watching on YouTube? That is the gap that we called at the beginning of the year. And I'm not saying I called it like I know everything. Everybody sees this. This is just a trading operation, which is there's a gap to fill on the SPY at 448. We didn't fill it yesterday, but we did fill it today, right? So very bullish technicals there. You got that gap fill, and we're going to do these technicals and then talk about tomorrow what we have going in. So we broke the downtrend. Now we're moving up. We fill the gap and we're going. So we're going above the gap. I think tomorrow the market will pull back and go back and check that gap or the next support. So I'm thinking at 448. Maybe 448 is a level, but maybe not. Maybe we consolidate back down, because the biggest, I think the biggest macro negative going into tomorrow's data is going to be, actually I put this on my Twitter. Yeah. Go follow me on Twitter also. I had a bunch of bots follow me and then they left. And so I need some more followers there. Need to get that up. And then you'll see basically all the charts that I post. Let me see, ADP payrolls. If those come out hot, the market's going to react negative. And also you want to see the CME FedWatch tool. If you'll see the CME FedWatch tool actually price in a higher chance of a rate hike, and that'll push the market lower. Also, you could just look at bond yields. You can go to the 10-year and just see how it reacts after the morning data. So this is about 45 minutes before the market opens. You should see where bond yields go. Where are bond yields going to actually head? Are they going to keep going lower, or are they going to are they going to bid right back up? But there is a bid in bonds. There's a bunch of inflow into actual bonds, so that's a positive there. Rent prices going lower. Not now. It depends where you're at. But rent prices, you're seeing rent disinflation. So rent prices will go down a lot faster than housing prices. And Fed talked about this also in the meeting in Jackson Hole, right? So anyways, going back to these technicals, that's S&P. We look at the Qs, see what the Qs price action, did it look any different? Qs, same thing, got through the level. Did they fill a gap? Possibly. Yep, they fill the gap. Wow, the Qs exploded through the 370 gap. I mean, wow, very strong market today. I think a lot of it too is that global liquidity is picking up. The money market fund money, the money in the money market funds is leaving. So where's it headed? Well, it looks like it's headed into equities based off what I'm seeing here. It looks like it might be going into a little bit of crypto, trying to front run the ETF. And you said Big Boy lost everything. Send me a link. I want to actually see that. Oh, he got hacked? No way. He got hacked? Or no, that was old. Well, that sucks. That's why it's kind of shady to show all your information all the time. Okay, so anyways, back to the technicals real quick. Let me take a small little break, then I'll come back and we're going to go over these technicals for Tesla, the entry points, exits, where's your stop for a swing trade. It needs to come back down to 240. Tesla's a little hot today. The entry was the oversold, but we'll come back to that. Look at IWM, and we'll go through the bull market, how it continues, and then we'll say, hey, what is the data we need to look out for tomorrow, and then we'll be done with that. I'll be right back. Okay, so you wonder if we get a ETF in September. That'll be very bullish for crypto if we get the ETF in September. All right, so Dow coming off. See, we'll check what Tesla looks like. Man, that was a strong move by Tesla. Big upside move. Not sure if we get the gap up until tomorrow. Maybe. Okay. Yeah, your support is 241. I think Tesla does come back to 241 there. And I'm actually thinking about taking some off here. I might actually jump on. We are coming into that 50-day moving average. I want to get more Tesla at 241 if it pulls back. A lot of hype today. A lot of hype today for Tesla. Special order from the Highway Traffic Safety Administration over autopilot feature. And then you think maybe I'm too early, right? Maybe I'm too early, but I'm still looking at the RSI. Once that RSI gets oversold, I mean, back to overbought, that's when it's like, okay, let's take some off and wait for some more support. But big move off that 50-day, off that 100 daily moving average for Tesla. You can see that. And that's always your signal, right? That oversold, this is where you look for support on a bigger long-term swing. You're looking for the oversold, and then where's the support? Where do people get extremely fearful? Is the overall market supporting you at the same time? Jump over to the weekly chart. It's getting above that 50. All right, I'm sorry, the 100. Okay, it's not bad. We're still holding the uptrend though. Now let's remove the pre-market and look a little deeper. All right, so our next resistance for Tesla, which we probably gapped down in the morning. I think that PCE data might come out kind of bad. 270. So your next resistance is really 270 for Tesla. It could just move right into that 270 right off the bat. Cool Dude 2000. I got all the technicals on YouTube, and they are also, it's being recorded. So you can go back and check that out, or you can go on there live right now. Ask your questions. Yeah, so I think Tesla needs to come back into 240, 241, 240 for another entry at this point. Okay, that's for a good entry. If you're not already in it, I would not chase this. Do not chase Tesla. You don't want to do that. It's gonna mess up your risk reward. You want to see a pullback into 240, 241. That's where you get long if it holds, if you have the right technicals, right? If the overall market continues to hold 441. So in my view, what I'm seeing here is Tesla's at 256. If we look at SPY, or you can look at the Qs, SPY needs to probably come back to 444 and hold that level. It did fill the gap and go higher, though. It might just keep going up. And then if you look at the Qs, the Qs resistance in the short term was about 270, 250. So it's a little bit above that. Could come back down to 370. I'm sorry, 370. Could come back into that 370 gap. But definitely we could trend all the way back down and just keep trending higher. This is going to be there's a lot of macro data. So it's going to be very volatile going forward. A lot of macro data. All right. So I think that's what we're looking at here. And this thing went a lot higher than I expected. 18% move. All right. Well, going into the close, I'm actually going to make a choice here, because I got long some extra calls on Tesla. So give me a second. I'll be right back on here. And if you're on YouTube, you can still see what's going on. What I'm going to do is I have some calls. I'm going to sell those calls. All right, cool. Yeah, I bought some calls. I've been long Tesla for a while, but I bought some calls, and I'm basically just gonna collect some premium on that and wait for that pullback. Maybe get them longer out depending on the narrative, the catalyst, and that's it. And that is the market end. That is the end of the stream. No, I'm just kidding. That's probably what I'm gonna do in the future, though. Once we hit the bell, that's it. So I'm looking for Tesla to pull back into 241. I want to see the hold. I want to see the I think the S&P is a little overextended. If I had to make a guess, I would say tomorrow morning is the market's going to pull back, just because it's up a lot today, and those ADP employment numbers might be better than the market wants to see. Right now, good is bad news to some degree. If it's too good, right? If it's just even, great. But if it's too good, then yields might climb right back up. Growth expectations for GDP, I don't think that's negative in the long term, but in the short term, yields could go back up a little bit. Core PCE, right? Maybe that might save the market. If core PCE is negative, market can definitely go higher from there. So got to keep your eyes on that. Pending home sales, those will probably still be negative. I'm short oil this week. Yeah, oil cannot get above 83.50. I think that's where the resistance or where the resistance is on oil. So 83.50 is the big level. Man, Tesla was strong. Goodness. Take a look at Zoom here. Zoom is still struggling after that pretty good earnings report, in my view. Teladoc looks like trash. Okay, so anyways, I was just really like, what should I do about this Tesla? I told myself earlier, if we get above 255, then I would take those off. And I think it's a little overextended. I can add some back on tomorrow, depending on the macro data, how it looks. If it goes without me, that's fine, because the way I'm trading, which I don't really tell people because it's a little more complicated, is I already have some size on for the end of the year. So take some off, trade a core, add it back on if it's bullish. So here's the upside trend, which is why I think, Tesla's a little overextended right now, given all the data we're about to hit. And I think there's a lot of good narratives. Maybe it just goes back to 270. Okay. But we could pull back into 245, 244 possibly, right? If it's really bad. We'll see how that plays out. So that's what I'm looking at there. What else do we have here? SPY. Let's do SPY. Can S&P hold this level? Man, it got above all the support levels or the resistance levels pretty quickly. When I see a move this quick, I'm like, wow, okay, it should probably run out of steam for a little bit to get those buyers to get dragged, drag right back in. Bitcoin ETF, man, a lot of narratives here going into Friday. All right, so what do we have after tomorrow? So we get tomorrow's data, and then Thursday. What do we have Thursday? Thursday, you get the EU's inflation report, personal spending, personal income on for the US. So spending data, and then you got core PCE. So Thursday is going to be pretty big because you get the Fed's preferred inflation gauge. You get some Fed speak. It's going to be volatile. Core PCE is expected to come in. I'm sorry, PCE. Just call it the Fed's inflation gauge year over year. Expected to come in at 3.3%, so higher than it was before. Month over month at 0.2. Where's the core though? I want to see the core number. The core is expected to be hotter. The core is expected to go up. So if you get a downside beat, this might be a good setup. If you get a downside beat, the market could really take off to all-time highs on Thursday if you get a lower beat on PCE. Friday, you get unemployment and non-farm payrolls. I expect unemployment to remain low. Non-farm payrolls, I don't know, man. They've been revising these numbers up and down. You also have ISM. Wow, that's on a jobs report. ISM PMI. That's going to be interesting to see if it shifts back up. But the market today, maybe a little bit tomorrow, is going to make its strongest move. That's my prediction, that it's making its big move just based on the outsized move here intraday. I think it's making its big move. It's pricing in better data right now. So the market, I think, is pricing in better than expected data. If that is the case, it just moves sideways, by the rumor sell the fact. If the data comes in worse, expect us to come back down into the trend. We're still going to hold the uptrend, but we'll probably come back down into the trend. I'm sure oil this week, man, me too. I think oil is definitely going lower. You've heard what I had to say in the news. You probably read the newsletter. A lot of people are increasing supply while global growth is still stalled, right? And oil needs real demand. So even though there is some printing coming, that doesn't push oil demand higher. You need real infrastructure to start happening for oil to go. You need real demand to come in. The strongest season for demand for oil was the summertime. That's already over. So I think we're going lower for sure. Why is Tesla up? Full self-driving. There's a lot of rumors. I don't want to call them rumors, but there's a lot of expectations for full self-driving to come online. And if this will push the stock up for sure. But full self-driving expectations are the biggest revenue driver other than the energy storage segment. And nobody believes it. But if it is true, they have the best AI on the market. The AI is not just ChatGPT where you pump in a bunch of numbers, but this actually drives a car, right? Oh, what am I doing? FSD. Brain fart over here. So let's see what they're saying about Tesla. I think it's full self-driving. That's my view. Full self-driving, supercharger network, and Cybertruck are coming in the second half of the year, right? So those are going to be very huge catalysts. It's back in an uptrend. And if the market holds up here, based on this data, if the Fed does pause, we're going to all-time highs. The market will go to all-time highs if the Fed does decide to pause and core keeps falling and headline keeps falling. We need oil down. We need headline. We need oil prices to go down to bring down headline back to the twos, and you need core to continue to decelerate. And I think we're going to get that because consumers are starting to backfire here, right? They're not spending as much as they did. Seasonality starting to take place. So there's all kinds of news. There's a lot of stuff. There's just a lot of stuff hitting the pipeline. Anyways, I think that's it. If you guys don't have any questions, I'm going to end it right there. You got the news. Just rewatch the stream. If you want to know, just rewatch the stream. Tesla just chugging higher. I'm looking for a pullback, maybe into 240. You never know with Tesla. It's going to have to pull back somewhere. That was a very strong move. Almost no selling pressure. Shorts are getting squeezed. People are definitely are getting squeezed over 240. So maybe 244, maybe 245 even too. There was a gap at 245. So could pull back into 245. Looking for that. S&P looks good. SPY looks good to hold the levels. And yeah, I think that's about it. No other questions. You guys stay blessed. We will catch you again tomorrow. Don't forget, if you're new, sign up to the newsletter. It is free, and I'll be on at 2:45 p.m. Eastern time to stream. If you're looking Eastern, 2:45 p.m. Eastern time. If you want to stream, I'll have all the latest macro data, the most important macro data going forward, and we'll do the technicals. If there's any new fundamental news for the S&P earnings revisions or whatever it is, we'll talk about that too. If there's any new catalysts like Bitcoin ETF, Tesla's full self-driving, we'll go over that also. Either way, you guys stay blessed and get your workout in today. Stay blessed. I'll catch you guys later. Thank you.